So this week is a mad week for the stock market, and I'm sure you're going to have a lot of stocks in your portfolio making big moves this week because it is the peak of earnings season. This is the equivalent to the Champions League final, to the Super Bowl. It's going to be a mega week. So this video hopefully sets you up for what is going to be a massive week in the stock market. If you could hit the like button. Apart from that, let's get started. Now, before we do, I've got two quick favors to ask of you guys. I dropped a video the other day or last night, which was the best UK investing app trading 212 review. If you could, even if you're not interested, please just go on that video, give it a like, give it a comment, get it out there in the YouTube algorithm for me. It's a video that really helps bring new subscribers into the YouTube channel. So even if you're not interested in the video, just for all the free content I give you guys, I normally don't ask for a favor, but if you could, that'd be absolutely amazing. And just to let you know, if you are on the Patreon, we did drop 2 exclusive videos over the weekend. One of them was a stock request, which the members of the Discord vote for me to take a look at a stock, which was Lululemon. If you do want to see that, join through the link in the description. And as well as that, we did an earnings review and we took a look at some of the companies that reported earnings last week, which was like Money Group, Airtel Africa, Google, Enphase, Visa, and Tesla. Anyway, apart from that, let's get stuck into this mega week, this Super Bowl week of earnings that is going to go on. Now, very quickly, it's also a busy week on the UK markets. Not many stocks that I personally own that are reporting earnings, but there's a lot out there. So some of you guys that focus on the UK stocks, you might have some. So here is a good list for you guys. This comes from Investment Bites on Twitter and Instagram, so do go give him a follow if you do have a little bit of time. But the big one is going to be the US market. The US market is busy this week. So Monday, as you watch this video, not as busy. We've got McDonald's that are reporting. Apart from that, there's not many other ones that I'm really interested in. I know a few people are looking at McDonald's as maybe a bit of an interesting play at the moment, but Tuesday is where it really gets busy. Now, I'm actually going to be away on Tuesday, but I feel like I might have to do an emergency video depending on how some of these companies report their earnings. On the morning, we've got some of the big fintechs, haven't we? We've got SoFi. SoFi is a big one. This is Marmite. Some people love the stock. Some people absolutely hate the stock. I never realized how much SoFi was actually hated until I actually did a video on them, and I looked at the comment section. I was like, wow, like that's the biggest split I've ever seen on a company where there's so many people loving it and so many people hating it. Personally for me, I mean, I look at this, I'm a shareholder. Personally for me, I look at the stock down 23% year to date, and I look at the financials that they've done. I mean, the amount of times they're beating the earnings estimates, and if they go do it again, that'd be absolutely amazing. But the stock is negative, is personally for me is quite surprising. A few people that are negative on it will say, well, it's not surprising to me, but for me it's a little bit surprising because, you know, you look at the company and the valuation's coming down, the profitability is starting to really ramp up now. They have moved from a negative EPS into positive EPS. They're expected to grow at good rates this year, and they've already hiked it up twice, I believe, this year, and maybe a little bit of a hike once again. And this is without the tailwind that will come if interest rates start getting cut as well. If interest rates start getting cut and that economy speeds up and those more expensive purchases start happening, it'll do even better. I think personally for me, SoFi is a very interesting stock. So it's a very volatile one. It always moves off earnings, so we'll see what happens there. And then obviously another one is PayPal. Fintech is just not being liked at all this year, is it? You know, this is another one that's down 5% year to date and hasn't really done anything, even though the financials have been good. You know, the company's been growing 8% so far this year, which is good growth. EPS, obviously they've changed how their accounting goes, but the EPS is still very good. You've got the share buyback, which neutralizes the drop in the EPS, which means that you are getting PayPal at 13 times forward earnings. I think 13 times forward earnings for a company that grows 7-8% a year is definitely very good value, and hopefully this is the big thing. Now we're getting into the prime Alex Chris time. So obviously PayPal brought in their new CEO, which is Alex Chris, who came in the 27th of September 2023. We're starting to get 12 months in now. 12 months in is where you start judging the CEO. And I'll be honest with you, if PayPal sits around the 7% growth, I'll be disappointed. I really want to see Alex Chris turn this into more of a 9%, 10% revenue growth company every year. If he does that, I mean, I already think I'm going to make money on it, but if he gets it to that little bit extra growth and that little bit extra profitability, that's where I think PayPal doesn't just perform very well. It becomes a very big performer. So it's time to start judging Alex Chris now. He's made a good impression when he's come in, but this is where he's got to really deliver on those financials. And I think it's already been good, but I think it could get a little bit better. And if it does get a little bit better at 13 times forward earnings, that's where it gets interesting. But yeah, we said it before. The fintech space is just not liked at the moment. Honestly, that's the big issue at the moment. We've got Pfizer that reporting. I know a few people are staring at Pfizer as a bit of an opportunity. We've got BP, P&G, and then on the close, big close, we've got AMD. I've got to say, AMD, I still struggle with AMD because, I mean, it's 204 times earnings. On a forward basis, it's 40 times earnings. And, you know, the analysts are saying that it's going to get back up the growth next year to 27% growth, which if it does that, fair enough. We'll see if it does achieve that. But at the moment, I just think that for the growth they're doing, it isn't very attractive at the moment. So I think it's, you know, it's being pulled up by the likes of Nvidia, for example. But, you know, if the chip cycle does slow down, it'll definitely not look a very rich valuation at the moment for AMD. I'm not a big AMD fan. Microsoft, obviously one I've owned for what, 5, 6, 7, 8 years now. Obviously would expect steady earnings from them, nothing too crazy. Starbucks are reporting, obviously a relatively new position into Starbucks. This is the first earnings I'm going to go through as a shareholder. I bought on the dip off the last earnings. I do expect a bad quarter, I'll be honest with you. I don't know how much of it is priced in at the moment. Obviously the guidance took a big cut last time. We'll see if it gets any worse, if there's a double cut in guidance, or if they actually surprises. I think it'll be a little bit weak once again. I don't think there'll be much improvement. That's the hint I got from the earnings call last time round. So be prepared for a drop on Starbucks, but we never know. Sometimes you think it's going to go one way and then it goes total the other way. That's the thing with earnings season. It's a bit of a gamble, really. That's why it's not best to really invest because of earnings. You know, sometimes you can easily see companies bring out good earnings and they drop. And I've seen it before where companies bring out bad earnings and they go up. So Arista Networks, Pinterest, one I used to own, did very well for us. Lemonade, I like Lemonade, but the profitability, it's not good enough. EA, and then on the Wednesday, we've got some Boeing that are reporting, Altria, Kraft Heinz, MasterCard. Obviously, we've already had Visa's numbers, so that'll be really good to see what MasterCard are seeing with the economy at the moment. Meta reporting, I've got to say Meta, you know, you look to Google and, you know, Meta and Google sometimes move very similar on earnings. Meta though is 26 times earnings, but if you look at the numbers that Meta are potentially going to be putting in at the moment, the EPS is potentially going to go from $2.98 up to $4.72. If that happens, that is a very impressive EPS growth there. And revenue growth wise, 25% revenue growth, and that'll be nearly 18% growth this year. And next year they're still expecting, you know, nearly 13% revenue growth. And you look at the valuation for Meta, and it's currently trading at 23 forward times earnings. Like 23 forward, you know, we talked about Google the other day being pretty fairly valued, and that's maybe why it didn't get the reaction off good earnings. I look at something like what Meta currently is, and if they start doing these numbers here at 25% revenue growth, the EPS going up by that much, I think that this isn't a terrible value here. So yeah, I'll be watching that one because I don't think the value is actually that bad. We've got ARM reporting, Qualcomm, Lam Research, Paycom. It's a few stocks I'll take a little look at, but nothing too major. Thursday, big day on Thursday. You think like you get past the midweek, we're going to calm down a little bit? No, not at all. So we've got Moderna, Crocs. I always like checking out Crocs, Wayfair. But it's to close. Amazon reporting. I know a lot of you guys are big Amazon fans. I personally don't own it. If it got to the right value, I would own Amazon though. Apple are reporting. Apple's numbers are actually, I looked the other day, the rebound that Apple numbers are going to have look actually pretty impressive. So we'll see what happens with Apple. We've got Intel, Coinbase, the big one, the king. We'll come back to that one. I'm just going to say this right here though before we do go on to the next one. DraftKings. What's the disrespect going on here? Like, this normally used to be top of the most anticipated list, and they've moved it all the way down. Like, DraftKings is the most anticipated. Don't kid me. Yeah, even with my bias on. Okay, we should at least be above Coinbase. I mean, who cares about Coinbase in 2024? Maybe in 2021, but not in 2024. We've got to have DraftKings higher than Coinbase and Intel. I'll let Amazon and Apple slide, but come on, we've got to knock it up there a little bit anyway. But yeah, DraftKings, obviously DraftKings do the classic report on Thursday, and then they do the conference call on the Friday. So I'll see if I can get a video for you guys. Do you want to see a DraftKings earnings review? Let me know in the comment section. Roku reporting Block, once again, fintech platform, stock that's not performed that well, but financially it's been a very good performer this year. So once again, it just goes in the list that, fintech is just not loved at the moment. I think Block should be higher than where it is right now. I should have loaded Block up. Let's do it. Let's go on Block. Let's see what's going on here, because I actually think when you look at Block's numbers and their valuation at the moment, I actually think this should be doing a lot better. I think they're growing double-digit growth, and so they're expected to grow nearly 23% in the next quarter, if this is right from Yahoo Finance. Sometimes Yahoo Finance's numbers can be a little bit off it at the moment. And EPS wise, it's going to nearly, it's going to double nearly on the EPS, which would put it somewhere to, I believe it's like 20 something forward times. It's even less. Wow. It's 18 times forward earnings. 18 times forward earnings for a company doing these numbers. I mean, you get so focused on SoFi and PayPal that you sometimes forget about how good Block's numbers have been this year and the valuation. I don't know how Block is at these levels right now. I keep thinking I need to be buying more of it, but the problem is that it just comes to diversification. Buying SoFi, PayPal, and Block, 3 fintech platforms in one portfolio is it's a bit much, but I wouldn't be surprised if Block comes anywhere close to those numbers. I won't be surprised to see that share price do very well. We've got Booking Holdings, which obviously would be good for seeing holiday travel with the likes of Jet2, Ryanair. What are they seeing out there? We've got Mercado Libre, which I feel like I've not talked, even though it's like my 5th largest position. I feel like I've not talked about it for a long time. Had a pretty flat year really. It's only up 8%, but financially looks to still smash it. 37% growth expected. EPS to go from $5.16 last year up to $8.53. On a forward P basis, I think this is in the 40s. Let me double check. I've got to stop saying things and then checking on it. I should do this beforehand. 49 times earnings. 49 times earnings for a company doing these numbers. I think that's all right there. So we'll see what Mercado Libre does. I would expect them to obviously absolutely smash the EPS like they normally do, and that stock should start rolling up a little bit, because it's been a little bit quiet at the moment, and the financials have been very impressive. And then on Friday, there's a couple of stocks here. But anyway, the last one, DraftKings. Let's talk about DraftKings. So, not sure if any of you guys have been keeping up with DraftKings recently. By the way, we'll say about the share price. So again, a bit like Mercado Libre, only up 8% year to date, even though the financials have been, once again, 10 out of 10 financials, which is quite surprising. But the average EPS is to go from $0.17 to negative $0.01, which would be very good. Once again, really good improvement on the profitability. All those people that said DraftKings could never make profitability, they've all suddenly gone very quiet in the last 18 months. Revenue growth of 46% year over year. This is with what's been a very quiet patch of states coming online. Obviously, with the elections, we should hopefully get a speed up of more states coming online with the elections that do come in the next kind of couple of months. But it's been a pretty quiet time, and the fact that they're still growing 46% year over year is very good, and I would expect that current year growth to get hiked up once again from 35%. I think we'll be pushing towards the 40% by the end of the year, which I think I said at the start of the year. I still can't believe analyst numbers. I mean, they're expecting 20% growth next year, which is just scandalous. There's no way this company's going to grow at 20% next year. This company's going to be more towards 30-something times 30% growth. And that's without factoring in if any states come online. If states come online, then that could absolutely get blown out of the water. But we're just, once again, we're seeing so many things that at the time were said to never happen are still happening. The growth at very good rates, even without any states coming online. The path to profitability that people said that would never happen is happening. I'd be interested to see around the capital allocation. That's the big thing that they said they would do in this quarter. They would talk about what they're going to do with potential capital, because they've got they're starting to forecast, really good amounts of free cash flow being thrown off. Where they're going to do it, they've got a good balance sheet. Are they going to pay down debt? Are they going to do a share buyback? That's what we're going to be looking for. The only thing to be careful of is that there is a couple of rumours going out that potentially the EBITDA is going to come in a little bit weak because there has been bad sporting outcomes. I think this is the third quarter in a row where sporting outcomes haven't been the best for DraftKings. They've managed it before, and it's something that will happen, and we'll get it in the benefit in the longer term as well, so don't worry about it too much. That's the only thing to be careful of. You might see that mentioned in their earnings report, and maybe that does affect the numbers slightly, but from a long-term game plan, everything is here. Everything is still going on with DraftKings, where the growth is just absolutely insane. The path to profitability is insane, and the levels of profitability, they're going to be throwing off. I mean, next year the forecast, and we know how conservative analysts in DraftKings are. I mean, the forecasts go from negative 0.22 to 0.8. If they get to that next year, and that's being conservative. It just shows you the ramp up of profitability, and all of a sudden you look at DraftKings, you go, actually that doesn't look that bad of a valuation when you start looking at these numbers, how quickly they scale up. So we'll see. That's the big one for me. Like I said, I wouldn't really be too bothered on what the share price does. And normally I'm just like, look at the financials, that's the main thing for me. But I think it'd be nice for DraftKings to kick on a little bit. It is underperforming the S&P 500 this year, which, considering the financials it's done and how good the financials have been, I knew it was going to be a cooler year, considering how strong last year was. It was a very strong year, but I'm happy with it taking a break, but I'm a bit like, okay, we're taking too much of a break a little bit here now. It's time for the share price to go up a little bit, considering how good these financials have been. Nothing too crazy, but I think it should have a decent-ish year, at least be level with the S&P 500, considering the financials it's done. So we'll see what happens here. Knowing what sometimes it can happen, we'll have good earnings and the stock goes down. Do you remember the days in 2022 when I used to make the videos and I used to break down the earnings, and the amount of times that I'd break down the earnings and I'd be like, these are 10 out of 10 earnings, and then the stock was down 20%. The amount of times I did that in 2022 was insane. And then you had all the people typing in the comments going, oh, DraftKings, it's a dud pick, worst pick ever, largest position, awful pick. And then eventually the share price actually started following the financials, which always happens in the stock market. Take a look at Card Factory at the moment, by the way, as well. Oof, that's one's woken up at last. Anyway, waffling on. I'm going to call it there, guys. I'll try get a video on SoFi or PayPal tomorrow if there's something massive that's gone on. The only thing is, like I said, I am away tomorrow, so bear in mind that if I don't get a video out, that's the reason why. But if there's something major, I'll try to do a video on it anyway. Hope you enjoyed the video. Hit that like button, and I'll see you in a bit.